webinar. So the reason for understanding interplay of GST law with other laws is because of the fact there are certain laws which play various importance in the commercial transaction when we are working in a commercial sphere, when we are advising any business entity. The business entity doesn't function in a unidirectional thing as in just complying with GST law. Business entity has to function in an ecosystem, and that ecosystem is also regulated by various other laws and regulations which are framed by the government. And for that reason, it is relevant that we understand that in what ecosystem that particular transaction is being done, so that our advice is not unidirectional. When we advise anything to our client, it doesn't look like that we are not actually complying with the other laws or regulations, or it is actually not practicable to follow that advice. And for that reason, it is very much relevant that we understand and implement what are the other laws which have impact on the GST law as in business transactions. And this is what this slide was all about. So any advice given only considering GST law is unidirectional and is in not a complete advice, it is an incomplete advice, and for that reason we should look after other laws. And it is also helpful in making submissions before the authority that see I haven't complied, or the meaning of that particular GST law is this, and the understanding can be derived from the other laws which make a clear-cut understanding on that particular provision. So let's discuss one of the provision which is really very relevant in the business transactions. We see in our daily transactions, business transactions. So let us say a company is taking loan, and for the purpose of that loan, either the bankers look out for some securities, or the bankers say that you get me a corporate guarantee for that loan. If in case you default, I would be able to recover that loan amount from that corporate. And even in that case, wherein the corporate guarantee is not available, so let us say holding company is not able to give a guarantee on behalf of a subsidiary company because of XYZ reason, because of any reason, or let us say there is a standalone entity and that entity doesn't have any holding or a subsidiary company. So what happens generally is the bank seeks the guarantee of directors. There is someone's mic. So normally what happens is the bank, I think sir किसी की आवाज आ रही है, ये कुछ भी निकाल सकते हैं, दुर्गा दास सर की आ रही है, डीडी अग्रवाल सर की. So what happens is the bank would be asking the guarantees of the directors. Now I wish to understand your views on this, whether in case when the guarantee is given to a bank by a director on behalf of a company in which he's a director, he's giving guarantee to a bank, whether that transaction is liable to GST, where that transaction is liable to GST even when the director is not charging anything. What is your views on that? I would like to have your views on that. A director providing guarantee to bank for a loan which is being given to a company. So whether in this case, whether the GST authorities are going to say to that director whether you are liable to pay the tax, what is your view on that? So see, the chat box is running. I would be viewing your views on the chat box. You can mention your views on the chat box. So my question is whether the GST authorities would be recovering any tax from the director for the guarantee which is being provided by the director to the company, and the director is also not charging any consideration. So we understand that under GST there is a requirement of consideration. Any views on this? GST department is right. Sandeep Sharma ji has said this. So again, when we go to GST law only, this view from Sandeep Sharma is totally correct, because they say that the director and the company are related persons, first thing. And in case where the directors and company are related persons, in that case, even when a transaction is happening without consideration, the open market value of that transaction has to be determined in terms of Rule 28. And accordingly, the GST authority would say that, see, if the directors and the company would not have been a related person, in that case, what percentage would have been taken by some other person for the purpose of giving that guarantee. So he would be taking that open market value and would be levying the tax. However, as I said, that I would be not looking only into the GST law, I would be looking further beyond the GST law to get the answer of this transaction. So when we go to RBI directions, I am moving to next slide. When we go to RBI direction, so there is a RBI master direction, master circular, which was issued in year 2015, wherein it has been specifically stated that, I am reading those lines from the circular. The system of obtaining guarantees should not be used by directors and other managerial personnel as a source of income from the company. Bank should obtain an undertaking from the borrowing company as well as guarantors, that is directors, that no consideration whether by way of commission, brokerage fees or any other form would be paid by the company or received by the director directly or indirectly. This requirement should be incorporated in the bank's terms and condition and for sanctioning of the credit limit. The reason I produce this provision is because of the fact, the purpose for which Schedule First was created under GST law was because of the fact the Parliament was of the view that in certain transactions, there would be no open market value because related persons are involved. However, in this peculiar case, in the given facts, when a particular law, legislation or a regulation which is mandatorily required to be followed, and in that case, that regulation specifically says that there cannot be any consideration which can be charged by directors, and when any consideration has been charged by directors for the purpose of giving that guarantee, the directors would be penalized and liable for penalty and prosecution under the RBI and FEMA laws. In that case, whether we can still say that the Parliament would have envisaged this particular transaction, in that case also the Parliament would be understanding that we are going to make this transaction liable to tax. In my view, no. This is the result of unidirectional advice which we normally give to our clients, because in my understanding, if we produce this direction to any GST authority, they would also be able to understand that had it been a rental services, the case would have been different. Director giving his premises on the rent to the company and not charging any consideration, that can be covered under the Schedule First. However, covering a particular transaction which is barred by the law cannot be said to be covered or intended by the Parliament to be taxed under GST, because the Parliament envisaged some other type of transactions while framing that Schedule First. And for that reason, in my view, when a particular thing is illegal or barred by a particular legislation or a regulation, in that case, it cannot be taxed, even when Schedule First deems it to be a transaction wherein even when there is no consideration, the transaction would be liable to tax. When we go to Rule 28, we are going to get open market value of this transaction to be 0. Let's say the authority says, let's try to derive its open market value. What can be an open market value of a illegal transaction? An illegal transaction doesn't have open market value. And for this reason, according to Rule 28 also, for a open market value, for this type of transaction, the value would be 0. And for that reason, to my understanding, if in case the directors are giving personal guarantees to a corporate, for that reason, these transactions cannot be liable and would not be liable to tax. normally we have seen that there are various liaison offices which are being created. Liaison offices are being created for the purpose of correspondence or act as a communication channel. However, when we go to GST authorities, what they are going to say is, they are going to say that whether this is a business, yes, this is a business, because even when there is no profit motive, even when an office cannot supply goods or services, even when it is acting as a communication channel only, even in that case, business is an inclusive definition and would cover those transactions also. When we go to GST authorities, we are going to say that liaison office is only claiming the reimbursement. It is actually in the nature of pure agent, which it is working as a pure agency type of thing. The GST authorities would say that profit is not relevant. It is not income tax. It is GST. Even when you are selling the goods or supplying the services on loss, we are going to recover the taxes from you. So there is consideration, there is business, and as such, there is a facilitation, as in it is facilitating its foreign entity and accordingly covered by the services or let us say supply. And for that reason, GST authority says that the transaction is liable to tax. And we have seen various advanced rulings also wherein they have said that this is liable to tax. However, when we go to things which are beyond GST law, we find that there is whole lot of commentary which is being given on the liaison office by the RBI and FEMA directions. What is that commentary? Let's look on that. RBI directions are being issued under Banking Regulation Act and FEMA Foreign Exchange Management Act. Para 4B of the notification number FEMA 22 lists down activities which can be undertaken by a branch office liaison office. And specifically for liaison office, these are the activities which are being mentioned. Liaison office means a place of business to act as a channel of communication between the principal place of business or head office or by whatever name called and entities in India which does not undertake any commercial trading, industrial activity directly or indirectly and maintains itself out of the inward remittance received from abroad through normal banking channels. So let's assume if I am going to put forward this submission to the GST officer, he is also going to understand that I cannot make someone liable for doing a legal transaction. I cannot say someone that you are covered by the taxation law, GST law, yet you are not a business entity, because under the RBI directions, you are not a business entity. And for this reason, if in case the RBI direction says that it is only a channel of communication, it cannot undertake any commercial, trading, industrial activity directly or indirectly and maintains itself out of the inward remittance received from the abroad through normal banking channels. In that case, the GST authorities may also able to agree. And if in case, obviously, when the GST authorities are not agreeing, there are appellate forums also wherein these submissions can be made. It is further stated by these directions that LO cannot earn profit. It is specifically mentioned in the directions that LO cannot earn profit. Whether or not I am earning profit is secondary thing. When I am debarred by any law that I cannot earn any profit, how can this transaction can be considered to be a business transaction? It cannot sell assets at more than its book value. There is no value of intangibles as in the goodwill, or there is no intangible value which can be taken by liaison office from any person. And for this reason, the liaison office are not actually covered by the business thing also. These are not covered by the consideration thing also. Even though there were favorable rulings from the appellate forums also, advanced ruling things also, there were negative rulings also. But if in case we are going to make these submissions, obviously any authority can at least take some view in our favor in deciding the merits of the case. Any question having anyone till now? Otherwise, we are going to proceed further on this. So these were the two RBI directions which I wanted to share with you guys. So Sandeep sir has said that let's proceed. So here I would be having a particular question from you guys. So there was pandemic and the clients were actually not making payment. The clients were not actually making payments to us. We are actually providing internal audit services to them. Our monthly or let us say quarterly services payments are received on a quarterly basis. Let us say April to June payments are received in the month of July. And these services qualifies to be continuous supply of services because the period of these services exceeds 3 months. It is not the billing cycle which is relevant. It is the continuous nature of the services. Internal audit services or a monthly retainership type of services which a CA firm gives is basically continuous in nature. This qualifies to be continuous supply of services. Now, there was pandemic. Last year also there was lockdown, and last year also there was lockdown. In the month of April, I was providing monthly retainership services, GST compliance services, various other services. The payments were made by the next of the month, by the 10th of the next month. In this particular case, before the COVID, we were actually reporting these transactions in the month in which payment were actually received by us. And this is also in line with the GST law, wherein they say that in case of continuous supply of services, the payments triggers the point for raising the invoice. I have received the payment, and in that case, this is normally in terms of the contractual terms also, wherein monthly payments are being prescribed, and I have raised the invoice and reported in my GST returns. However, during those 3 months, April, May, June, during the month of COVID, the government deferred various timelines for compliances. 3B1, ITC 04, they deferred various timelines. However, I was making internal audit services invoices, retainership services invoices before COVID on a monthly basis. However, I haven't received my payments for three months or 4 months. For that reason, I haven't deposited GST with the government. Whether in this case, whether I was compliant while not depositing GST with the government for these 3-4 months because I haven't received payment from my customers, my clients, I haven't received the payment. Otherwise, I was actually making the payment on monthly basis. I was reporting these transactions on a monthly basis in my GST returns. Whether I was in compliant with the GST law, anyone would like to have his or her views on this? Amit Kumar Agarwal ji has said that no, there was non-compliance. What is the reason for non-compliance, Amit ji, if you can say, and I can help you to get compliant on this. Anyone else would like to have his or her views on this? This is a simple case that we haven't received the payment, and for that reason we haven't reported the invoices also in GST returns. And this is, I mean, this was the practical approach which was followed by each and everyone. Monthly clients we have normally we have our monthly clients from whom we receive monthly income. I think GST to be paid on bill basis and not on receipt basis. Sir, this is totally correct. Agarwal sir has said rightly that GST has to be paid on billing basis. But what is the timeline of billing which is being provided in case of continuous supply of services? In case of continuous supply of services, the GST law says as and when the payment is getting due, in that case, the timeline for raising the invoice triggers and making the payment of GST to government triggers. So let us say for the month of April 2021, when there was pandemic all across India, you haven't received the payment from the client. In the month of May, whether you were not supposed to raise any invoice, you were supposed to raise the invoice, because in case of continuous supply of services, they say that it is going to be decided by the contractual terms, whether it can be oral or it can be written. Seeing the past nature wherein the payments were received on a monthly basis, your liability to pay the taxes for the month of May 2021, when all the entire country was suffering from COVID, was in the month of June only. In the month of May, you were required to raise the invoice, and in the month of June, you were supposed to make the payment to the government by the 20th June. However, most of us haven't made the payment. Most of us have raised a consolidated bill of, let us say, 4 months or 6 months, and reported that amount in the month of, let us say, August return or September 2021 return, as and when the payment was received from the client. Because who is going to pay the GST amount out of my own pocket, because client is not paying me? In this case, we can take the support of contract law, and we can document such thing, because as and when the GST authorities are going to come, or let us say, forget about CA firms, in case of rental services also, there is a continuous supply of services, and your client may be having rental income also. He is getting the rent on monthly basis. He was earlier paying the taxes on monthly basis. However, after pandemic, he started for at least 4 or 5 months, he started paying the rent on a consolidated basis. As and when the GST authorities are going to come, whether they are going to leave you on the reason that there was pandemic, no, they are not going to leave you. They are going to charge the interest and the penal consequences, whatever are applicable. In this case, we can take support from the contract law. What does contract law says in this regard? Section 62-63 of Indian Contract Act provides for novation, recession, alteration, suspension, or remission of performance. So what was my performance? My performance was to issue an invoice to that person. That was the original contractual terms. Whether it was written, whether it was implied, that doesn't matter. Contract can be an oral contract also. So in this case, what I can suggest is, we can document such thing, and there can be an addendum to that contract, and that can be recorded on email also, that for the period of 6 months, I am taking the example of 6 months, April to September, we are going to amend our contract. We are going to add an addendum to our contract, saying that in respect of 6 months, the auditor, the landlord is going to raise the invoice for 6 months, April to September. This can be recorded on email, and as and when you send out an email, this qualifies to be an amendment in the original contractual terms. And in that case, once the payment terms have been changed, in that case, GST law provides that in that case, issuance of invoice for a period of 6 months is also fully compliant with the GST law. That understanding can be recorded over email, saying that for April to September, I am going to raise an invoice for 6 months. And it is always better that we get an acceptance from the other party also, because other party in any case have delayed our payment. So I don't think there is going to be any concern simply saying that for April to September, there was a single invoice which was raised, and that single invoice is fine. Now question may come that this relates to past period, whether we can amend that terms now also. There is no debarring under the contract law that a thing cannot be changed after 6 months. This email understanding can be written now also, saying that for April to September, we have raised a consolidated invoice for the services, for our internal audit services. We have raised a consolidated invoice. Please confirm this thing over email. Once you get an email, this qualifies to be amendment in the contract. This qualifies to be remission in the performance of the contract, as in there is a remission from monthly performance of the invoicing terms to 6 monthly performance of the invoice terms. And for that reason, this will qualify to be a duly compliant GST invoice under GST law, and there cannot be any interest consequences in that case also. Many of the clients were receiving rental income, but they haven't paid the taxes or they haven't paid the interest. So this can be used, and this can be recorded on email now also. There is another thing that normally what happens is, I am again going to ask your views on this. Normally what happens is, let us say there is a client, there is one of the client called Kentaro. Kentaro supplies their RO machines to their distributors, dealers. There is a term which is being mentioned in the Kentaro contract with that distributor dealer, wherein they say that we are going to supply Kentaro machine to you for ₹1,000. However, if in case during the financial year 21-22, if in case you purchase from us more than 1,000 Kentaro machines in the month of April 22, in the month of April 2022, we are going to assess the performance. You have purchased more than 1,000 machines from us for ₹1,000 each. In that case, we are going to give you ₹100 discount. We are going to give you ₹100 discount. And this discount is actually not recorded on the email. They have assessed the performance. There is no email recording on this. There is no contractual understanding on this. They have said that we are going to give you a discount, and normally GST authorities or we say it to be a secondary discount. Whether this secondary discount can be eligible for raising a credit note. So what I had earlier done was I raised the invoice for ₹1,000 plus GST for 1,000 machines. Now I have reduced my price in the month of April for the preceding financial year machines which I supplied. I reduced my price. That was never recorded on email. That was never recorded on agreement. Whether for ₹100 discount, which I have given to my distributor or dealers, 100 into 1,000 machines, ₹100 per machine multiplied by 1,000, it becomes ₹1,00,000 discount. Whether on ₹1,00,000 can I raise a credit note, GST credit note, and reduce my GST liability? Whether this is possible? I would like to have your learned views on this. Anyone would like to have their views on this? I had actually supplied 1,000 machines for ₹1,000 in the month of April to March 2022. That is last financial year only. And in the month of April, this month, I am reducing ₹100 from each machine. Whether I can raise a credit note for this machine, this understanding was never recorded on the invoice or let us say agreement or on email. Whether this is possible? This is normally called yes one can. Sandeep sir, I would like to have your views on this, how you're saying this is possible. Any provision, raise commercial credit note, but that means when you are raising commercial credit note, you are not eligible for GST reduction. You have already paid GST basis ₹1,000 on each machine. Now you are saying that for ₹100, I am going to raise a credit note, but not reduce my GST amount. GST cannot be reduced. This is what Sandeep sir is saying on this. Anyone else would like to have his or her views on this? So now, so there are no views on this. There is a GST circular by CBIC wherein they have stated that a secondary discount which was never recorded on any agreement or an invoice. In that case, the GST amount cannot be reduced, and this is what Sandeep sir has said, that a commercial credit note has to be raised. A credit note reducing the GST liability cannot be raised. However, when we go to contract law, or let us say when we go to section 15, both these state that even the secondary discount is eligible for reduction and GST amount can be reduced. How I am saying this? Because there is section 62-63 and section 62-63 again can be applied to this, wherein the payment terms can be amended, and as such the contract is going to be changed and the payment terms are going to be changed. The second thing, that as per section 15 of GST law, transaction value is price actually paid or payable. And when we go to section 2, consideration is again price paid or payable. Whether we can say that the payable amount, since the transaction is continuous supply, there is continuous supply which is being happening. the contract is still applicable. There are warranty services which last for 1-2 years. The contract is still subsisting. And for this reason, I can say that secondary discount, that 100 rupees discount which I have given on each machine, actually substitute the consideration even under the GST law, because it says the consideration which is being decided and when it can be said to be decided, before the initiation of a particular transaction, or it can be decided after the initiation of that transaction. In my view, that can be decided after the initiation of that transaction. The contract law also says that the GST law also uses the word payable, and payable can change anytime. Even though I have paid something, but that doesn't become payable, and payable can be changed. And the consideration definition also satisfies this case, wherein they say that consideration which is being decided to be paid or to be payable. So to be payable, again I can classify that particular discount, wherein I can say that the consideration which was decided earlier was 900, and now the consideration, the earlier consideration was 1000 rupees, now the consideration is 900 rupees, and accordingly I can justify this case that secondary discounts are also eligible for this case of reduction, and accordingly I can reduce my GST liability. There are certain contractual law things also, constitutional law things also. I am not going into that because these are not regularly used, and we are actually running short of time because it's already 4:40. Now, there is a provision which says that the goods should be actually received by a recipient. The goods should be received by the recipient. There should be actual receipt of goods before they can avail any ITC. Now, let us say I have one client who is a distributor of Kia cars, Kia motor cars. They have a factory at Andhra Pradesh. They have sent out a particular car on 30th of the month. That car is received by me on 4th of the month. The car terms are like this, and this is normally the case of every motor industry, wherein they say that the manufacturer, that is Kia, is selling the car on X work basis. There is no risk, there is no responsibility of Kia during the transit. All the risk and rewards are transmitted to the recipient, that is dealer, who is sitting in Noida. From Andhra Pradesh, a car is being sent out on 30th, and that car is being received on 6th or 5th of the subsequent month by the car dealer here in Noida. Section 16(2) says the credit is available when there is receipt of the goods. Whether in this case, I would like to have your views again on this. Whether in this case, the credit can be availed in the month of April when the car are dispatched, 30th April when the car are dispatched, or the credit can be availed in the month of May when the car are actually received by the dealer who is sitting in Noida. Anyone would like to have his or her views in this, whether the credit would be available in the month of April or whether the credit would be available in the month of May. The car dispatched on 30th, car received on 5th or 6th of the May. Anyone would like to have his or her views on this? This is pretty clear transaction. This is the problem of most of the person, and this is, I mean, this is really a bigger problem, and for this reason, tricky one, Sandeep Sharma sir has said. Please explain. I would be explaining, sir. I would like to have others' views, or others may be sleeping. I'm not aware of that.
No, people are not sleeping. Actually, they are listening, right? Because the thing is...
But I would like to have the chat box running. This is very simple transaction. Piyush,
already Piyush, Amit Agarwal, already they are...
Input can be availed in May only. Piyush ji, input can be availed in May only. So he is saying that the cards are actually received in 5th and 6th. And this is very normal transaction, in transit transaction. We are taking credit on receipt basis. So again, I would like to justify my views saying that the credit would be available in the month of April. The reason I would say is because of these. Explanation, when we go to that explanation which is given in that particular clause wherein they say that the person should have received goods or services, there is a beautiful explanation which is being captured in that provision itself. That explanation says that the goods are deemed to be received where the supplier has supplied those goods to recipient or any other person. When the supplier has supplied those goods to recipient or any other person on the direction of such registered person as in recipient, whether acting as an agent or otherwise, whether acting as an agent or otherwise of the recipient. So what does this entire line means? Now I am taking example. The transporter was appointed by recipient. First, we are going to discuss a simpler case. The transporter was appointed by recipient. The goods were supplied by the supplier to that recipient who was to that transporter who was acting on my behalf. If ownership transferred, in that case, only can take input in April. Yes, this is correct, and this was actually I was discussing. And how we are going to say this concretely is what my role here is, because the law doesn't say ownership. We have to go to Sales of Goods Act to justify this. The law says that I was taking the example that the supplier has given the goods to transporter, and transporter was actually acting on my behalf, as in I was appointed by the transporter, and I am going to pay the freight value. In that case, this explanation which is being provided in section 16(2)(b) is completely applicable. How? The supplier has supplied the goods to any other person, that is transporter, who is acting on the direction of such registered person, that is recipient, because the transporter is acting on my direction. And whether he is acting as an agent or otherwise, in my case he is actually acting as an agent, because transporter works as an agent, and even otherwise he qualifies to be in this particular transaction. And for this reason, taking the help of this explanation, I can very well avail the input tax credit. Now let us say, moving forward, a case may come that the transporter is appointed by supplier and not by the recipient. The transporter is appointed by supplier, which happens normally in the motor industry. Let us say the transporter was actually appointed by Kia, and allied, as in the client which is sitting in Noida, doesn't have any role from the transporter. Even in that case, when I go to section 23 of the Sales of Goods Act, because the word delivery is not defined, I have taken a cue of the word delivery, because section 16(2)(b) explanation says when the delivery has happened to a person, in that case a person can claim the input tax credit. However, it further says that the transporter, the appointment of the transporter and all these things it says. However, when we go to Sales of Goods Act, it says that transporter need not be appointed by a buyer for the purpose of delivery. What I am trying to link is the word delivery is being used. When you are going to say delivery has happened, a normal person may say that delivery has happened only when the goods are received by me, or when the goods are received by a transporter who is appointed by me. However, in this case, what I am trying to say is that the transporter was appointed by Kia. Even in this case, the delivery is duly complied, because section 23 of Sales of Goods Act says the transporter need not be appointed by a buyer. Even in that case, the delivery is considered to be complete. There is no definition of delivery under GST law. And taking a cue from Sales of Goods Act, it says delivery of goods has completed when the goods are being given to a transporter, whether or not appointed by buyer, recipient, in a case where X work, where the risk and rewards are being transferred X factory. even when the transporter was appointed, and there was a case when the transporter was appointed by Kia. In that case also, the dealer who is sitting in Noida can avail the input tax credit even though the transporter is of Kia, because the invoice says risk and rewards are transferred, the delivery has happened. The contract says the delivery happened, because normally bigger supplier, the dominant supplier manufacturers doesn't take any responsibility once they have given the goods at the distribution point, and from there the delivery are happening across India. So they say that delivery has happened. However, they have appointed the transporter. So my concern may be the transporter has been appointed by them. How can I claim the input tax credit? Even in that case, Sales of Goods Act comes into play, and it says that the transporter need not be appointed by any person. And for this reason, this explanation is very beautifully captured this view, because it has said, the reason I read that explanation, even though it was not recorded in this slide, I was remembering that explanation. It has said that the goods are supplied to a person, whether acting as an agent or otherwise. So that otherwise means even though he is not working as my agent, even in that case, the delivery has duly happened and I am eligible to claim the input tax credit. And accordingly, I can claim the input tax credit in the month of April itself in case of X work transactions, where whether the delivery has happened to my transporter or his transporter. So this is a particular case, and this is the real life case which I am discussing. And this view is further fortified in the sense that the supplier Kia would be recording his transactions in GSTR 1 of the month of April, and accordingly this would be reflected in my GSTR to be of the month of April itself. So why to wait for May when there is this explanation which is being provided under the law? The risk has been transferred. Prakin single G, this is rightly said, ITC can be availed. The risk has been transferred to the recipient, and accordingly. So it is very relevant that we go through the contractual terms before taking the ITC. This provision is normally being discussed across all the forums, that transfer of development rights is not liable to tax. I have this view supported by various other provisions of the law. General Clauses Act says the benefits which arise out of the land. The Registration Act says, the Land Acquisition Act says, every act says the benefits which arise out of the land. Transfer of development rights is the benefits which arise out of the land. Accordingly, land is equals to benefit which arise out of the land. It is actually land. So sale of land or sale of development rights is actually sale of land only, and this is being covered in the definition of land. And once it is covered in the definition of land, it becomes a subject matter of taxation of the state governments, because in entry number 49 of the 7th schedule of the Constitution, it is stated that tax on land, and land includes benefit to arise out of land, is subject matter of taxation of the state government. And accordingly, taking all these provisions, it can be definitely implied that transfer of development rights is not taxable under GST. However, we have different provisions under GST law. I mean, obviously there are no different provisions, there are different interpretations which are being done by the GST authorities. So I'm not discussing on that. There are various jurisprudence which is already available on the subject. Very relevant, I would be discussing Article 141 and 142 of the Constitution. The reason why this is relevant is because of the fact what happens is, I would be discussing with you guys on this. Let us say April 2018 to March 2019, that is financial year 18-19 refund has been applied by me in the month of, let us say, January 2020, let us say, I would say December 2021. The refund for financial year 18-19 has been applied by me in the month of December 2021. Whether in this case the refund would be considered to be out of the limitation period, because there is a 2-year limitation period for, let us say, taking a simple example, April 2018 refund has been filed by me in the month of December 2021. April 2018 refund in December 2021, whether this is covered within the limitation period which is being provided under GST law. The department is going to sanction this refund. I would like to have your views on this. Anyone? Anyone would like to have? Dio Nandan Kumarji, you have mentioned your membership number. I would like to have your views on this, sir. So under GST law, there are no views on this. However, very relevant transaction, and this can cover whole lot of period from March 2018 to February, let us say till the time pandemic lasted. So in this particular case, April 2018 refund, 2 years limitation period completes in the month of March 2000. April, I would say April 2020. So 2 years completes on April 2020. 2 years limitation period. Section 54 of GST Act says for the April 2018 refund can be applied till April 2022. 2020 because 2018 adds now adding 2 years and it becomes 2020. And in 2020 there was pandemic. Supreme Court in exercise of its power under Article 141 and 142 stated that when the period of any limitation, when the period of filing of any application, suit, application, proceedings, initiation of any proceedings falls within the period of April 2020, that is the period when pandemic started, till February 2022, that period has to be excluded from limitation period. And the limitation period for such cases would expire in the month of 45 days from February 2022. As such, the limitation period expired on 15th April 2022. For the refund application pertaining to April 2018, 2 years expired in April 2020. However, Supreme Court in exercise of Article 141 and 142 extended it to April 2022. This is the period wherein we are sitting as of now. And this was not accepted by GST authorities, as in the GST authorities haven't provided relief for delayed filing of application. CBIC also came up with a circular wherein they stated that limitation period, as in the benefit of this particular case, so moto extension of limitation period is not going to apply in case of refund proceedings. However, recently one judgment of I would say various judgments of one Madras High Court, Calcutta High Court, now Bombay High Court also have stated that even in case of refund proceedings, the limitation period which is being provided by Supreme Court by this order is going to apply, and accordingly the limitation period was revived. When in a case for April 2018, I filed the application in December 2021, I can get the relief out of this judgment of Supreme Court and various judgment of High Courts. I am also arguing one case in Allahabad High Court on this subject matter. So let's see how the proceedings happens in that case. And this can cover whole lot of period, 2 years period. Pandemic lasted for 2 years, and 2 years limit extension. That means extension of limitation period of 2 years. So for April 2018, the limitation expired in April 2020, and I filed a refund application in December 2021, and I can get the relief. There is again very important thing which I would like to discuss here is, normally we see that there are various transactions which happen in business entities, like transferring of input tax credit and various things. Nothing to be said on a forum which is getting recorded here. And in that case, what they have done is, normally we see that there are GST provisions, there is nothing happening. GST provisions are there are penalty which are being provided under GST law, that is sufficient. We are well aware of that. However, in 2021, what government did was, in case of fraudulent purchase of those invoices, wherein a person purchases, as in purchases the invoices, not purchases the goods or services. He purchases the invoices, he claims the input tax credit, he exports the goods, and the exports is, let us say, there is actually not, let us say there is a bottle getting exported for, let us say, 1 lakh rupees. The customs authorities have cleared that export. What that person has got is, he has purchased the invoices, he has the input tax credit of 1 lakh rupees. What he has done is, on a export of rupees 1000 rupees bottle, he has got, and the value was shown to be, let us say, 10 lakh rupees, 15 lakh rupees, and this normally happens. This is real example which I am giving, is the values are inflated so that the refund is also inflated. The refund, what that person got is, he exported certain goods, the goods were actually not of much value, however he inflated the value, got that exported through by clearance through customs authorities, and in a way what he did was, he filed the refund claim, shipping bill with payment of IGST. He got 1 lakh rupees cash. He got 1 lakh rupees cash of input tax credit of the invoices which he purchased, of not the goods he purchased, of the invoices which he purchased. Normally, our view is that GST law is not going to provide, doesn't provide much of the penalty, and accordingly, these cases are also settled. However, in Finance Act 2020-21, they amended the Customs Act, wherein they stated that, and they have given very wide powers to customs authorities, wherein they have stated that, please read third number point, penalty up to 5 times of the amount of refund in case any person has obtained any invoice by fraud, collusion to utilize input tax credit for discharging any duty or tax on goods under claim of refund of any duty or tax. So what this seeks to cover is those cases where IGST refund was being obtained. They have said that 5 times the amount of penalty can be attracted under the customs law for these cases. So very relevant to note that if in case a person is purchasing an invoice, there is a provision under customs law which is being introduced by Finance Act 2021 to introduce such penalty. I think there are various other provisions also, and since we are running short of time, I would like to now have the queries rather than keep discussing on these provisions, because we are having next session of Rohit sir, who is also going to take certain GST litigations. So over to Sandeep sir, and I would like to have any queries from members. Hope you liked this session. We were actually able to cover only 4-5 case studies, but there are hell lot of case studies on this. Yes.
Shivashish, sorry to interrupt. I think it was going very fine, right? And very interesting cases, what you are explaining here. But one thing I just wanted to know from you. You have very well explained the interlinking of GST law with other acts like Contract Act and Custom Act and all, right? I think someone is unmute. I'll request all of you to please.
Manji requested to. Yes, he is now on mute.
So the thing is, we understood that there is an interplay of GST law with other law. Like in your first example, it is with RBI, second with contract, then custom and all. So the major question is how to proceed with GST. See, the thing is, if I tell you, so even if newspaper you have see so many news that directors are getting notices for providing guarantee to the company, right, under GST Act. So are the GST officers are going to accept the fact that yes, RBI is having this law or RBI is having this master circular, so we should not issue the notices, or this interplay of law is only going to settle in the courts only, right? What should a client do, or what should we advise to the client being a professional? Should we go to the court, or we should try to means advise, try to
Settle the
push
cases
this
at the adjudication forums also. I
education?
understood your point, sir. So as far as Sales of Goods Act, Section 2B was concerned, I
Yeah,
think that can be, to my understanding, that have been accepted in my cases by various authorities, because the explanation says so. And that is the view of the taxman also, V.S. Date and all these experts. I have taken the views of that experts also. And that is pretty much clear explanation. At least in that case, to my understanding, the cases should get settled at the adjudication level. However, in a case where the personal guarantee thing is involved, normally, obviously, at least we can make the submissions before the authorities that these are the provisions. Normally, what happens is we are actually not aware of these provisions which are being provided under the other
correct,
laws,
correct,
and
correct.
at least we can make the submissions. And what happens is, in that case, there the chances of relief get increased. And in any case, sir, the GST authorities doesn't listen of their superior officers, or let us say doesn't listen to anyone. And in that case, obviously we have to settle those cases at the court level, that is tribunal level. In my view, these cases doesn't require one to go to high court, because these relief are being provided at the C-state level earlier also. So in that case, my suggestion is at least two appeals, that is first commissioner appeal level and second tribunal appeal level. One should be open to dispute all these things at least before the tribunal forum. And in that case, these disputes can be settled. If in case the GST authorities doesn't accept, normally they are not going to accept in case of personal guarantees, what I have seen. But yes, it is always better that we support our client to the best, and at least we can make the submissions, and we can support the justice dispensation system in the tribunal also, as in when the tribunal is going to see our submission, the tribunal view is also going to tilt in our favor, just because we have introduced various provisions and not simply recorded the provision of GST law. So this is my view on this, sir.
Thank you, Sivashish ji. Thanks a lot.